You're listening to the Moneyweb Now podcast series with Simon Brown. Live streamed every weekday at 6:30 a.m.
It's Thursday, 13 August. We got UK GDP data expected later this morning. 0.8% is consensus. I'm Simon Brown, coming at you live and loud from the Moneyweb Global Headquarters, Johannesburg, South Africa. On the show today, Faheema Adia from Momentum. Two contrasting updates. Grindrod, market didn't like. Shoprite, the market absolutely loved it. Sean Wibberley, he's CEO Weaver Fintech. They had results. Good revenue growth, but Heps slipping. I suspect that is a concern around impairments. And then we're going to chat around data that's showing the true economic position of women in South Africa. This podcast is brought to you by Stanlib Asset Management. Invest in more global opportunities through their partnership with JP Morgan Asset Management. Morning headlines: Moneyweb, the Fashini Group borrowed 1 billion rand to buy back shares that are now worth 553 million. One-off boost to Heps, but the interest bill will remain every year until that debt is repaid. Bloomberg, US core inflation comes in subdued, easing pressure on the Fed. Morning markets, US was green, S&P up 0.25%, Nasdaq 0.75% higher. Easter's mostly red, Sydney 0.4% lower. Tokyo's the exception, up almost 1.5%. Hong Kong 0.1% down, Tencent 3.5% weaker. Commodities mostly red. Gold futures the exception, $4,470 an ounce. Brent 87.87, platinum 1,756, palladium 1,367. The rand is 16.14 against the dollar. Bitcoin 63,500. And top 40 opening call, green open 280 points, 0.25% higher.
Moneyweb Now, on the money. Also available on podcast.
Chatting now with Faheema Adia from Momentum Securities. Faheema, appreciate the early morning. Let's start with the Grindrod update. It didn't tell us a heck of a lot. Heps to be somewhere between minus 4.2 or plus 4.3. There's some one-offs in the previous period. There was some weather. More than anything, perhaps it's a stock that has just had a really, really good year, and market pricing it down some 11% yesterday on what was a bit of a middle-of-a-road update. You're thinking here?
Morning, Simon. Yes, so the share price was down almost 11% after that result. A bit of an overreaction in my view, but I think also just maybe a case of profit taking. That share price is up more than 80% over the past year. If you take a closer look at the trading update, if you look at the midpoint of the guidance, the Heps is actually largely unchanged from the first half of 2025, despite a more difficult operating environment. So there was a sharp decline in the earnings per share, but you can't really look at that because of the once-off accounting gains of over 900 million rand in that prior period. So like you said, not too much detail was given on this trading statement. But if we go back to the pre-close trading statement at the end of June, they did provide an update on the operational performance until the end of May, and that looked pretty resilient. So just looking at that, the aggregate terminal dry bulk volumes declined just 3%, despite that 8% reduction at Matola, which was caused by adverse weather and higher freight costs. And then they also reported some strong growth at the port of Maputo, Maiden Wharf, also Navitrade, but we did see some weakness in that logistics side of the business. So that, I think, perhaps has offset the stronger performance from the other areas and is perhaps the cause for the Heps being largely flat this period.
Yeah, but I agree with you. A bit of overreaction on a stock that has had a huge run this year. I think maybe some folks are saying, you know what, let's take some money off the table. Let's flip then to Shoprite, which is looking for Heps for about 9.7 to 14.7% higher. That's fairly well ahead of what I can see in terms of what consensus was. Market liked it. Shoprite, I mean, there's one of two things. Either you're a Shoprite shareholder and you're very happy, or you're Sean Summers and you look at this and it's a tough space. This was a good update.
Yes, definitely. Another solid year of performance from Shoprite, and why the share price was up more than 8% yesterday. So we're continuing to see market share gains. I thought it was quite notable that the group sales growth came in at over 7%, despite pretty low internal selling price inflation of just 0.8%. Like-for-like sales growth was also on the low side, but that was offset by some meaningful store expansion with almost 262 stores added. And then 60/60, of course, continues to be that star performer. Sales up 34%. We're also seeing an improvement in performance from the non-RSA businesses with double-digit growth in rand terms. So Angola and Zambia performing particularly well. And what was important for me is that the newer format businesses are also growing quite strongly. So that business growth was up about 57%. It includes the likes of that Pet Shop Science, Unique Clothing, Checkers Outdoors, also all those new ones that they've introduced. The pharmacy side of the business also showing decent growth of 9%. So all around, I think all business segments saw some good performance, and it was quite a solid update.
It absolutely was. And I like that you're mentioning sort of the other bits of the business, the pets, the liquor, the pharmacy. I mean, 60/60, up another 34.5%. It's now 25.5 billion, 10% of overall revenue. These other bets are really coming into their own and becoming nice little businesses on their own within the broader Shoprite stable.
Yes, exactly. And I think it just adds to the diversity of the business and it just boosts the long-term growth potential overall. So it's very good to see that the revenue and the earnings are starting to come through from these investments.
Yeah, and I think there's still probably huge potential in that pharmacy, and 60/60 just continues to be hugely impressive. Faheema Adia, Momentum Securities, appreciate the early morning time. And that's our poll today on LinkedIn. Around 60/60. How often are you using the delivery service? Maybe you're using, I don't know, the ASP or the Dash or something. Or are you a 60/60 fan? Have your vote, have your say. LinkedIn. The Standard Flexible Income Fund delivers capital preservation and consistent top quartile inflation-beating returns. Let your money keep working with Standard Asset Management even after you retire.
The headlines tell you what's happening, but you know what it means for your money. Join Moneyweb editor Rate van Niekerk in conversation with National Treasury DG and Gina Schoeman, Head of City Research South Africa, as they explain the economic forces shaping South Africa's future and your financial future. Tuesday, 1 September at the Sandton Convention Centre. Register for free using the promo code MONEYWEB. Money Summit in partnership with Moneyweb, the conversations that move markets and your money.
Moneyweb now. On the money.
Chatting with Sean Wibberley, he's CEO of Weaver Fintech. We got results for 6 months ending June, so revenue up 10%, Heps down 10%, 1.1 billion cash and unutilized facilities, giant number there. Sean, always appreciate the time. What's the difference between the revenue and the Heps? Is this, you talk around debtor costs increasing, provisions raised, it really is structural in terms of the book. Is that a fair comment?
Yeah, so look, really strong top-line growth, especially in the fintech business or in the fintech business across all of our verticals. So up 30%. Retail backwards because they've cut credit quite significantly and focused on being more niche.
Yeah.
But overall, revenue up. And the reason for the Heps being down has been that we've taken a big provision on our lending portfolio and we've seen increased write-offs, which drove us to take the increased provision. And management just felt that we should bank this now, and we've made big cuts in May. We see a few things behind this. One is increasing consumer affordability concerns, and I worry about inflation and food inflation in particular coming, especially into the second half of the year as well. And we had a few payment issues that troubled us over the last several months, where files weren't processed properly in the banking system, and that led to people rolling that were otherwise good, and we had to collect on them and cure them. And then we made changes to how we actually track customers, which didn't work out for us, and we've reverted back, and things are looking a bit better. Since the cuts, we've seen grassroots, but it's only been one cycle, and we want to see how that comes through in the next couple of cycles. But just on the lending portfolio, the payments portfolio is doing really well.
I take that, and we can see it in the numbers. We can also see it in growth. You're up 17% in terms of customers. You're now at 5.1 million. And the key point is, you talk a lot about the flywheel. This isn't a customer who comes in, engages with Weaver and then leaves and you never see them again. They are repeat customers over the course of a year.
Absolutely. We're booking 130,000 new customers into the fintech ecosystem. Many of them, or the vast majority, coming due to the BNPL product. Mm-hmm. And then those customers are engaging on that product, increasing their frequency and their spend. Because of the engagement on our platform, we offer lending and insurance products to those customers and get the cross-sell. That is the flywheel effect, and we're seeing 29% increase in customers who've taken a second or third product with us. Mm-hmm. And so that's the that's the beauty of the flywheel is getting customers in because we have an attractive product set, and then engaging them on the ecosystem and upselling them across into our more high lending and insurance.
Yeah, I hear you. In that customer growth, you've now got 5 million customers. The amount of data, and it's more than just what they spend. It's when they log in, what they look at, that sort of thing. I mean, is there a point where your data gets, to a level of maturity where more customers doesn't give you more knowledge? Or are you, as you add customers, you're able to just get smarter around the experience? Is there still opportunity there?
Look, there's a lot of opportunity for us to do more with the data. We get a lot of, as you say, 5 million customers are transacting, leaving a footprint with every interaction they have with us, and using that to make better credit decisions and better, propensity modeling for next best decisions, fraud modeling, and what have you. And a lot of work's been done in harmonizing all of our data into a Snowflake data layer, and then to add AI on top of that. Mm-hmm. We're big believers in making sure the data is nice and clean for us to use. And, with the growth we've got, the 5 million is going to grow even further. And we think we're going to be able to increasingly monetize that data to make better decisions and also to bring customers to our merchants.
Yeah. And that was my next question. How many merchants are you now up to? And to be clear, I mean, the merchants, you've got some really, really big names there. It's not, it's Pick and Pay as an example and others. But you've also a lot of smaller ones. How many are you up to these days?
We've got 3,850 at the moment. Wow. But we're looking to radically increase that in the next 6 months by integrating into payment service providers that themselves have integrated merchants. And our target is to hit 18,000 by the end of the year. These will obviously be smaller merchants than the larger tier one retailers that you've just mentioned, but they provide footprint and engagement ability for our customers to, so her local retailer will likely start plugging into our system.
And I've asked this question before, so I know the answer. But the merchant sees a benefit as soon as they're offering the buy now, pay later. They get better conversion. I mean, it is that simple, whether it's brick and mortar or online.
Absolutely. So the vast majority of our merchants, when they sign up with us, are seeing larger basket sizes, more foot traffic from customers, both new and repeat customers, and then better funnel conversion. So people are checking out on online and in-store conversion at a better rate than they have before.
And it's always it's the in-store. I always think of this buy now, pay later as an online, but it's bricks and mortar as well. Last question: you talked around merchant advertising as it's sort of emerging as a third fee alongside payments and insurance. Talk to me a bit. I mean, it's very early days, but what is the merchant advertising you're looking at here?
So this is where customers come to our shopping app, where she can browse all of our merchants. Merchants offer deals which are monetized deals. There are impressions on different adverts which result into clicks, and we're monetizing the impressions and the clicks to merchants that are participating in the ad business. And we see that as really scaling nicely into the future because it's a nice platform. We've got 5 million customers that merchants can then see pre-approved offers exhibited to using the data to rationalize what we offer to which consumers.
Yeah, Amazon does it and they make huge from it. We'll leave it there. Sean Wibberley, CEO, Weaver Fintech. Appreciate the time.
Give your money the return at once without taking a flight with the Stanlib Global Select Fund, an offshore equity fund sub-managed by JP Morgan Asset Management.
Moneyweb now on the money.
Chatting now with Liza, Nolte, new business development manager, AfriGIS. Liza, appreciate the early morning time. Analyst of more than 10 million property transfers dating all the way back to 1995. A humongous task, I suspect, but fascinating data that you were able to pull out around women, land, home ownership, business ownership. To be clear, different answers in each sector, but I suppose that's part of the reason, particularly why you went looking into the data to understand what the different influences are.
100%. And good morning. So I think this Women's Month, here's really a number worth celebrating. So since around 2016, South African women have been buying more homes in their own name than men, and they've stayed ahead ever since.
That's a striking number. I mean, as you say, I'm thinking to myself, when you say they're buying more homes, that makes sense. Then you say they're buying more homes than men. I mean, this is a striking number in terms of gender identity, gender independence in our economy. It's huge.
100%. So I think there are a few likely reasons why women are overtaking men. So now women are earning and financially independent in a way they weren't a generation ago. So you've now got more women in the workforce, more graduating. Social norms have also shifted. So women are buying on their own rather than waiting. What we've also seen is that men's only buying has stayed flat, whilst women's only has kept climbing.
So I get that, and the men not. That's home. What are we seeing in terms of land? Because land is an emotional issue, perhaps particularly in South Africa. Our history of land is complex and tricky. Where do we see the women in terms of land ownership?
So that's an interesting one. So I think there are two ways to count ownership. So stock is all the property already owned, which is typically built up over generations, still mostly men's, which is about 13%. Right now, flow is what's being bought right now. So where women are at, and that's a 38% and leading. So women can lead today's flow whilst the accumulated stock barely moves, because it takes years for new buying to shift a pile, built up over a century. But both numbers are true. They're just answering different questions. So think of it like the 13% is about the past and 38% is about the direction that we're heading to.
I get your point, because this is generational. Absolutely. This is, not something that changes quickly. The point that you make, though, is that it is directionally going in that right direction, where we are seeing the number increase. It's going to take some time. It might even take a couple of generations, but it's going in that direction, which is what's so hugely important.
100%. And what we've seen is where it's happening is Gauteng is the most women buying. That's the biggest market. But what we're also seeing from the data is that the fastest growth is in the smaller rural provinces, such as Mpumalanga, Limpopo, Free State, Northwest. And the progress is really reaching the places that waited the longest. So we're seeing real momentum in real communities.
What about business ownership? Because, to be clear, land is important, homes are very important, but businesses, there's almost something different to it, something more nuanced to it. Are we seeing similar sort of trends in that space?
So we're seeing that more women are stepping into business. That's the momentum. But the honest part is that men are still about twice as likely to own an established business. So from the stats, we're seeing it's 7.9% versus 4.1%. So there's real progress, but there's still more to do.
I get that. And that could also be the sort of perhaps the broader commitments on women in terms of household and family and therefore perhaps risk-taking in its entirety.
100%. But we can really see that there are definitely big gains being made.
And that's the key point. Progress, strong progress. And I like your point. I mean, we need to understand distinctions between perhaps the stock, the flow, the direction it's going. Direction broadly seems to be in the right direction. We leave it there. Liza Nolte, new business development manager, AfriGIS. Appreciate the early morning time. That's it for today. We were chatting with Jeremy Sampson yesterday, Brand Finance Africa. We're talking about the Miners Branding Report, top 50 mining brands in the world. No South African miners there. I got to say, I was surprised that mines have brands, but when you think about it, sure, but we're just absolutely missing. And of course, the big one was, where's De Beers? We asked you, are they missing a trick with their branding? Majority said nope, stick to digging your holes in the ground. The rest were agreeing, absolutely, there's opportunity here, and perhaps we're not getting the best from it. Have your vote, have your say, LinkedIn. This podcast is brought to you by Stanlib Asset Management. Invest in more certainty to navigate volatile market conditions. We're live every weekday morning, the Moneyweb website and the app, 6:30 a.m., podcast just after 7. Thanks to my team, Eddie, Nobokle, Nicole, Sabu, to you for listening, my guests for their time. My name is Simon Brown. This is Moneyweb Now. If you're loving the show, please leave us a positive rating and an awesome review in your podcatcher of choice. We promise to carry on bringing you awesome every morning, and we'll chat again tomorrow. AI and your money.
You've been listening to another Moneyweb Now podcast, posted every weekday at 7 a.m. on moneyweb.co.za. Moneyweb Now, on the money.